All right, good evening, guys. Sorry about the audio this morning. I was actually traveling and forgot to bring my big mic with me, so I had to rely on the laptop volume, and it wasn't the best. So I apologize for that in advance. I hope you could hear some of it. Um, but I wanted to just go over some of the trades that we had that we were holding today, as well as some of the um, different different trades that we talked about this morning, and also just kind of the overall market situation and where we're going from here with our trades. What we did we come out of some of them, get into new ones, and whatever that might be. So we'll start with the overall market. So I hope you guys had a great day today. First of all, the market today was actually incredibly bullish in the morning. This is just the S&P 500 cash. You can see here, I mean, huge up move in the morning. It was up. The Dow was up like 330 points at one point, like early, like in the day. The S&P 500 was up quite a bit. And overall, the S&P closed about up 0.8%. So still a pretty big day considering where it was yesterday. And you see here, we've got opposing tails now in this chart. Like I was talking about a couple of days back, this is such a choppy market. I mean, up days huge, down days huge, up days huge, reversals huge, down days, up day, down day, up day. So I mean, it's very choppy. It's summer. You've got all kinds of low volume going on. Today, most of the action was driven by, I think, the news about making some headway with China on the tariff situation. So I believe China is sending a delegation to the U.S. to discuss the tariff situation. So I think that drove the market quite a bit higher. That in addition to Walmart earnings. Walmart reported earnings today. And so I think Walmart, this gigantic move, 10%, biggest up move in Walmart in like I think a decade or something like that. I know it was the biggest up move in Walmart in a very long time, in a single day. So Walmart is up 10% today, just about, and that comprises between Walmart and I think Boeing and Caterpillar or Cisco. Walmart, Boeing, and Cisco. I'm sorry, it wasn't Cisco. It was Walmart, Boeing, and Caterpillar. Walmart, Boeing, and Caterpillar, all huge to the upside. I think those three stocks made for about 30 to 40 Dow points, 30% of the Dow point, rather, Dow points that went up today. So huge moves and some really big blue chip as well as Dow components. So we had quite a bit of an up move in the markets, at least in the beginning of the day. I mean, we can look at what, kind of where our kind of lines are drawn and just talk through this as well. So we had mentioned a reversal pattern here. And so we were looking for neutral to down moves in the market over the course of the next few days. I mean, it did give us some down moves in through yesterday. It actually gave us a couple of good days to the downside. So some of our short positions did work out. Unfortunately, with the up move today and this giant spike up in the morning, we did get stopped out of a few of the positions that we were holding to the short side, which is fine. I mean, it was the ones that we closed out were very minimal losses for, potentially, if the market keeps going up, it could be a good thing that we got out of them today. So regardless, they hit our stops, so we got out of some positions. So right now you can see the market, went up, did not fill the full gap. So what it did breach this gap line at 2842, around 2842 from the first day of the gap. It did cross into it, had peaked in 2 days ago, and then 3 days ago, it did peak into that gap. But today it really kind of shot through it in the morning and then just came down and reversed that entire move almost, at least the move here within the gap. It never hit the top of the gap. which is 28.51.98. So the gap technically is still there. It doesn't, it has just a tiny bit to go to get filled. So I honestly didn't think that the market would fill it this quickly, but news is really the driving force of the market right now, and that's kind of where we are. I mean, we're in a very news-driven market, and you can see that. I mean, just take a look at the action on this S&P. Super messy the past couple of weeks. So we're in a news-driven market, and we just have to go with what we can go with, and take the actions that we need to take, and get out of the positions that we need to get out of quickly, and let the other ones do what they need to do, and progress as they need to. So because I was kind of not in my office and not in front of my list and everything this morning, I was trying to get that video out really quickly, so I know I forgot several names that we were looking at and we were actually had positions in. So I'm going to go back over the full list of stocks that I was holding as of yesterday, and then talk about what we're doing right now. So we will start with GDX. GDX still looking excellent. I mean, this is an incredible move to the downside on this stock. Like, taking a look at the weekly on this ETF, rather. Taking a look at the weekly, I mean, what a perfect entry right here underneath this pivot. For such a huge, I mean, the weekly bar is a huge Maribozu candle, actually. If you take a look at this, a Maribozu candle is one that has no tails, and it's just a giant bar one way or the other. This happens to be a bearish candle, bearish Maribozu candle. It is just, extremely bearish. So if you take a look at gold on the daily, still hasn't hit our stop. We had the 50% fib, I think, is our stop, and it just barely missed it and bounced right back down and just kept going to the downside today, down 2.37%. So obviously we have still retained GDX. Because it crossed through actually my goal was 1854. So it is just continuing to go down. So I think my next target here is at the 1702 level that we talked about before. That's on the weekly chart. It's the next pivot that I could find over here on the weekly chart for gold. So gold's shown a lot of weakness as it broke through this ascending, like little wedge here. It has just shown some incredible weakness to the downside, going down from like 2157 to now 1816 at the close today. And this is, of course, not gold, but this is the GDX miners. This is the gold miners. GDX is the ETF for the gold miners. If you want to take a look at gold in general, which we usually do along with GDX, you can see it's also trending down. It's shown a little resilience here, but the miners did show some weakness, and gold is actually rolling back over a little bit in the after hours as well, extended hours trading. Okay, so that's GDX. Second is Zillow. Zillow, we talked about holding through any action that was not, that did not get across this upward trend line. So we're looking for Zillow to the short, to the downside, and did, consider selling it yesterday, but it didn't actually hit that. I mean, it like barely missed that upward trend line right there, and that was our stop. So right now, I did say I was going to pull my stop up to like half of this move here. It really just continues to show some weakness, even though it has some fits and spikes up to the upside. You can see here was the high of the day. So what I do in situations like this, I just make sure that that my stock that I'm short, for example, doesn't go over the first 5 or 15-minute high. Simple as that. You just monitor your stocks for continuation to the down or upside, depending on if you're short or long. And here, the way that I monitored for continuation is, it spiked high during the day, the first 5-minute bar, but I just marked that. You see the arrow there. I marked that first 5-minute bar high and said, well, if it doesn't get above that, I will continue to hold it to the short side. It never did. It just continued to, kind of vacillate here during most of the day, and then eventually just kind of meander to the downside. Still holding it. I am actually going to put today's high as my stop. So this arrow here will be my stop. I don't know where this arrow came from. My arrows seem to just kind of find them. I mean, when you have the arrow tool up, it just, if you even click a little bit, it adds an arrow. So this 47, I think 61 maybe is the stop for today. So that's, yeah, just around there. So that's Zillow, still holding it. We also had Yelp. Yelp did give me a bit of stress today. Since I was out of town, I actually wasn't just completely glued to my monitor in the first hour of trading like I usually am. But you see Yelp is kind of the same type of action as Zillow, kind of spiked up a little in the morning and then just continued to go to the downside the rest of the day. Now, I believe my stop in Yelp was this 50% Fibonacci retracement, which is 50% of this big bar right here. So, you know, we were looking for, the Yelp had a big move off earnings, came down below this 48.40 high. And then so this is a trade my dad gave me. I actually shorted it on this day of this big bar right here as it crossed down below the 48.40 level again. And we've been short ever since 48.40-ish. So we were using that 48.40 level as a stop. And then as it's come down, you know, what I'm going to be utilizing as, this actually is not correct. So what I was going to utilize as the stop actually was the top of this. I was going to use this body of this candle, the top of the body of the candle as my stop. So the top of this body of the candle was right there at 47.48. It actually did peek through that. You can see it did not. I don't believe even. I don't think it ticked up there more than like 1 or 2 ticks because it would have triggered my alert, and it did not trigger my alert. So I didn't even, I mean, there was no chance of even selling it up there. So I just held on to it and actually came right back down. So that works really well for me. And I'm going to retain my stop at 47.48 with a target at this downward, you know, right at this trend line going to the downside. So we talked about this longer term trend line here. It goes back actually a couple of years. So that's going to be my ultimate target for Yelp. I do believe it will find a bounce there, you know, to the upside. It probably will have a bounce. And honestly, this now that I'm looking at it, this is actually kind of a double bottom. So I'm going to look tomorrow actually to see how it acts. I have profit in it. You know, I've got profit from 48.40, and I'm going to see, you know, how it, sorry about the dogs. I'm going to see how it reacts tomorrow because this looks like a little double bottom. And, you know, for a stock that gapped up so much, it could easily gap up, you know, push to the upside and then retrace like 50 to 61% and then start, you know, kind of curving back up to the upside. So we'll see. We'll still keep 47.48 as the stop and go from there. So that's Yelp. Let's see. The next stock is Booking.com. So Booking, and I didn't talk about this yesterday. This is one that I forgot to include in my video from this morning. And I wanted to just let you guys know how the trade in that went, because this is an important one. It was one we got stopped out in, and I did want to just retrace, you know, kind of retrace that action for you guys. So you can see here, let's go ahead and put it on 10-day. Let's do a 2-day, 15-minute chart. Okay, so this is good. So in Booking.com, we had shorted the stock up here as it crossed this area. You know, we talked about potentially utilizing this upward trend line as resistance. It didn't get there, so we just kept moving our stop. And you know, what we had decided, so what my target for this particular stock was down here. The first target was actually going to be down here once it crossed through these two trend lines, the next target was down here at this 1836.18 level, which is the top of a gap. So you can see here on the left side, we'll talk about this gap again. So one pivot was 1870. Okay, so 1870 was the first pivot. It crossed through this 1870 pivot right here. And then the next target was 1836.18, which is right here, at the top of the gap. And then I had mentioned that's the gap right there. I'd mentioned that if it did cross through the gap, the target would be 1826.44, which is the close of the gap. And then the long, if it ended up going through there, then the target could be, further down, all the way down here in the 1700s. I mean, there's a little spikiness going on here, so it really, we use these two pivots, 1732, 1714. So you can see that the day before, so not today, but yesterday, it actually went through, like it gapped down into the gap. So you can see it actually gapped from the close on the 14th. So Tuesday, it actually gapped into this, like in the middle of this gap, and then went below it, and then kind of still, retained, just kind of managed in this area a little bit, like a little bit of back and forth action here with, really big up bar, really big down bar, really big up, big green candle, big red candle, big green candle, big red candle. So it's a lot of choppiness back and forth. And then it started kind of climbing to the upside. So what I do with gaps is take the first 5 or 15-minute high and utilize that as the stop point, right? So in this case, because it hit my target of 1836 and 1826, as it came back up through that first 5-minute high, this bar right here, as this bar started making its way up past this previous high, because as it's kind of coming up, you see higher lows from here to here and then here. So these are higher lows. It's kind of making a little up move. So this bar right here, as it started pushing up, I actually sold it. These arrows are just so interesting. Didn't sell it right here. I sold it here. So this is where I covered at the top of that bar. It's where I covered my booking position, which thankfully I stuck to my stops and was disciplined about my trading. And that made a huge difference in this trade, because you see this stock just went absolutely nuts on Tuesday and just rocketed all the way up to 1870, back to 1870 from 1836. So I had gotten out over here, didn't get back in, did not reverse positions or anything, because booking to me is a weak stock and I didn't want to go long at all. So we were out of booking on Wednesday during this move here. So you can see, just to kind of add a little side note to booking. We talked about this 1870 pivot as well as this upward trend line as being, resistances now that they've crossed through. Now that booking has crossed through this upward trend line as well as this pivot point of 1870, we should expect, if it does get back up, start going back up towards them, that they would act as points of resistance due to the big move through them with just huge candle, a huge candle and higher volume. This is like all of this here in this area is higher volume than the average. So as you can see from this chart, today's action on booking.com is actually pretty important. I did not make any trades in booking again because of, again, being out of town and having other things going on. But if you were able to watch this at all, you could see that, it closed just under this 1870 level on Wednesday, and then gapped up a little bit. With the strength in the market, it actually did gap up. But as the market was rallying hard Booking actually started showing some weakness. So that's relative weakness in Booking, like pretty strong relative weakness as the market was just rocketing up in the first half of the day. So if you were wanting a trade on this, you could have taken a trade under, like, as it crossed back through this 1870 level, because this could just be considered just froth based on the market's movement, and it still held this 1870 resistance. I mean, technically, it just, if you look at it on, on a larger chart, you can see it went through it and came right back down and closed. I mean, honestly, it closed below where we got out of the position. So, I mean, totally retraced the entire move that it made at the end of yesterday. So, honestly, it's probably, we talked about Booking maybe showing some sideways to down action until, my final target on this in the long term, is this purple line. So who knows? Booking could definitely continue its downtrend. Next target will be 1732 area, this area right here. And then my ultimate target is this purple line down the road. I mean, I would expect that you'd see some choppiness until you get there, but who knows? I mean, Booking is really weak right now. I mean, this action is just really weak, considering the relative strength in the market today and this total relative weakness in Booking.com. So, I mean, we could expect to see some action in between this 1870 and 1836 range, or 1826 range, maybe some consolidation in a bear flag formation, or even even coming back up close to this trend line. But I would expect to see a rollover back to the downside in Booking, and I'll be looking for it. Obviously, I can't get into it now. Would have been great to get into it underneath 1870 today, but wasn't able to take that trade. So Booking.com, lots of interesting action there, and we'll just keep it on the watch list going forward. Okay, so that's Booking. The next stock is let's see, Chubb. So Chubb, we talked about as a potential swing trade. Not a potential. We did take it as a swing trade. A couple of days ago. To the downside, and so I want to put this 20 moving average on here. I don't know why it keeps going away, but this particular stock, actually, we had traded it to for a short term, like few days to few weeks, swing trade to the downside. So based on the fact that it is in a longer term downtrend, and it had had a lower high formation here and break below the 20-day moving average. We talked about the first day that it closes under the 20-day moving average, the trade is to short the stock or buy a put at the crossing of the low of this day, right? So that's where we actually shorted it, and it had some great action the next day, gapped down really hard. And the following day, we talked about this little doji formation that it had. I did not expect this much strength in it, but because the market was so strong today, I had to, all my short trades were actually just reversing against me. So I'm going to just show you what happened with Chubb. So what you do in that case, we had a stop on this, which was, I believe, this high right here. I believe I had this 133, whatever the high of this bar is, it is 133.82. So that was actually my stop in Chubb. So I kept, the first few minutes of trade, first 5-10 minutes of trade, I just watched it, and as soon as it crossed over the first 5-minute high, that happened to correlate just about with that 133.82 level. And so as it started going up in this bar right here, into this bar, which crossed through the 133.82 level and showed some real strength, we actually got out of the position here. So did make money in Chubb because we shorted it up here and we got out down here. But again, another lesson in really having some disciplined stops on your trades. And if you're not able to do mental stops and use alerts, if you're not able to watch the stock market all day, you should go ahead and put hard stops in, like actual stop orders in, to trigger any kind of stops that you have, because as you can see, the market is a fickle thing. It can easily turn against you in no time. So Chubb, we're out of the trade. It broke through our stop, so we're done. The next is PNC. PNC, same thing. Same thing. All these stocks actually kind of looked the same when we went to buy them. So, I mean, they kind of follow the trend of the market a little bit. So PNC had some real strength this morning. It was actually very, very strong. And our stop, I think, was above the bar. So we actually got into this trade down here where this arrow is. You can kind of see it right there in that area. And the stop was going to be like, each stop is like above the next day's, above the prior day's high, right? So it was this was the stop here, I believe, right here at 143.30, which is this high, 143.30, which is the high of the 14th. So the Tuesday's high was going to be our stop. And yesterday it didn't reach that, so we didn't stop out of the position. And in fact, this bot is kind of like, shooting star type of formation. I don't know if it's truly a shooting star because it looks a little different, but it spiked up and then came all the way back down and has a tiny body down here that was actually kind of bearish. Who knew the market would be up 2% almost this morning? NASDAQ and Dow 1.5%, and of course all these kinds of financial stocks, because of the whole tariff situation, probably the financial stocks they did get a big boost today. So PNC, we did get stopped out of it again. First 15-minute high. This is the first 5-minute high, and this is where it crossed over right here at about 143.31, which corresponded quite well with the 143.30 stop that we had, the mental stop. So this arrow right here is where we got out of this position. Again, really good reason to have stops, because check out the action in PNC the rest of the day. I mean, it is absolutely brutal. So that's PNC. We're out of that position as well. So let's take a look at the next stock, which I believe we talked about a couple of different earnings trades. So I want to go through a couple of those earnings trades that we had talked about. We had spoken about Macys, I believe, briefly. I kind of did an off-the-cuff Macys trade with you. I still am holding Macys. Remember, we traded it this day off the first 5-minute gap. So this stock gapped lower on earnings day, which was yesterday. And we expected it to actually kind of roll up a little bit and then come down, but because of the bearish action right off the open, we used the first 5-minute low and bought that. Excuse me. Sold, shorted the stock below the first 5-minute low here. So that's where we're in the position, and this, the targets on Macys are here in blue. Excuse me. We have some pivots laid out for potential targets. Macys, I think, is going to show weakness. It's a retail stock, and retail has been strong, but Macys, I just thought would really hold this longer term downtrend line here. So you can see that it did hold it. Let's pull the daily chart up. Better look at the daily. Yeah. So see this, we utilized this pivot here for the downtrend in the stock on the long term. And so it did hold that. The target was 35.41, around 35.41, 35.30. And it did go through that and actually got below it today. So because of the action on yesterday, as it gapped down and fell through the 37.14-ish pivot and went all the way down here at 35.41 and closed the day very bearishly, I held the position and said that I would utilize this 37.10 area, 37.14 area, which was the last pivot, as a stop, to, like as a resistance point. So That's what we utilized. It never reached there. So we held the position today. It actually went down almost to this 34, 35, 45 pivot over here. And it did recover a little bit towards the end of the day. Still going to maintain 37.10 as a stop. And then we'll see how it acts. So we're going to hold on to Macys as well. We also talked about, I think this morning, there was JD.com, Walmart, Cisco had earnings. I was only able to tell you a little bit about JD.com. So JD.com, I actually, because of this resistance up here in the pre-market of this longer term, kind of downtrend line here, we, anticipated that the stock would come up a little bit more, maybe to this 3301 pivot, which is the low of this day right here, or this downtrend line here, and then roll back over to the downside, because it did break down below that a few days back. It was kind of, you see this lower highs, lower highs, lower highs, lower highs, lower highs, and then it broke. And then it broke below this line. So the expectation was that it would continue to go lower. And if it showed strength, that you should fade that strength. That was the call for JD.com. So you can see, and so I think I said, just look out for, some recovery to the trend line or to the 3301 pivot line. And then you could short it from that point on. And the target would be down in the $30 range, because that's, I think, where that's where the low of the overnight was $30 after earnings. I mean, the pre-market. So $30 was the first target. 29.25 was the second pivot there. If you take a look at the weekly, you'll see these pivots a little bit better. Yeah. So you got 30.01 and then 29.25 right here, this pivot. And then you had the next one was at 23.29. So it did partially start to work in our favor. Unfortunately, I lost, sorry about that. I lost a little money on this trade because I did follow my rules and get into the trade after, down below the first 5-minute high, or 5-minute low rather. So I actually bought into JD.com, not bought in. I bought shorted the stock at 31.75, I believe, in this area, right where this arrow is. And it did start to go in the direction that I wanted it to, but it kind of bounced pretty hard off of that with the strength in the market. And my stop is always, if I buy below the first 5-minute high, my stop is the high of that bar. So I did get stopped out. I did stop out of this position up here. So that was about $1 loss for me. If you had waited, and even if you had held on through, just if you had used this downward trend line, if you had a little bit more wiggle room and used this downward trend line as your stop, you probably would have been at least break even right now, or you could have even waited for it to kind of come back up and then take another trade to the downside as it failed at this 3301 level. So that was actually a good trade if you waited a little bit in the morning and took that trade to the downside. But it's like I said, this is actually a really good example of why the overall market sentiment and the overall market movement is so important when you're taking trades. So if you're taking a short trade, you kind of want the market to be not, you don't want the market to be screaming to new highs or screaming like up 2%, up 1.5%, up 1%, like very bullish off the open, gapping up. Not a really good environment to take a short trade. So in all honesty, I probably should not have taken a trade in JD.com at all, because I was bearish on the stock, and instead should have waited until maybe tomorrow to when it presented a better opportunity. And it probably will. This is actually a little bit of a weak chart, lower highs. This is, even if you go in the overnight, you've got this over here as well. So it could potentially have some continued movement to the downside. depending on what what the action is tomorrow. So I'll continue to keep JD.com on watch because I actually I do think Chinese internet stocks are weak in general, and that's just something I'm going to be looking for as a trade in the future. So a couple of other names, Nordstrom, and I actually haven't done the work on this too much, but I did want to share with you the stocks that are having earnings. Nordstrom had earnings after hours today. You can see it had a big spike up, and I'm just throwing these on here right now. Some targets for Nordstrom to the upside. Retail has been very strong. I mean, Macys is a little bit of an exception, but retail has been, pretty strong in general. And with Nordstrom, usually Nordstrom does okay. I mean, it hasn't had the best quarters the past. If you take a look at its earnings, it hasn't really moved too much the past few times it's had earnings. I mean, it might move, but it's like in this little range, right? It's not really going anywhere. But you can see it gapped all the way up to 60.22 and then has kind of come halfway back to the 55, 56 level. So right now it's scheduled to gap up to about 57. So that's $5 move. And I would say, I guess you could use this as a pivot too. That's actually kind of interesting that it pierced through this pivot here, like this one right here, and came right back down. So that may change things depending on what the action in the morning is. So just a thought. Keep JWN, which is Nordstrom, on your watch list, and then we'll see how the action goes in the morning, and then decide on whether or not to take a trade on it and how to take a trade on it. I mean, here it looks kind of weak off the 59.45 pivot. But if it starts showing some strength in the morning, I think you could get all the way to the 62.90 pivot, or even if you want to just, even the 61.91. That's really not a lot of movement, but it is. I mean, it's $2, around $2.50. So it's worth looking at. So we'll be taking a look at Nordstrom. I don't know if. Nope, we got out of that position. Yep, so I believe that was it. I will say, the market moving the way it is, with the news that it's had, the tariff situation, the currency situation in Turkey, and, all of that, and the just turmoil can cause for some violent, can be cause for some violent moves in the market. So just be careful out there. Get out of your, positions quickly if they go against you, and pick only the best setups, period. That's why I'm sticking with earnings right now in the summer, because for the most part, and I think those 3 or 4 positions that we talked about, like Chubb, PNC, and I think Prudential, those stocks, would probably be good trades in a normal market. But because of the crazy volatility in this market right now, because of the summer and the low volume, they haven't turned out to be the best trades. So pick your setups, make sure that you're watching out for the overall market condition, and just be careful out there.